I want to attempt a short and sweet comparison between venture capital and private equity because so many people reach me, and actually both of these both of these fields are highly attractive career options. So I often get the question, hey, should I do private equity or venture capital? What should I do first? What should I do at a later stage in my career? And the answer, of course, as always, is it depends. Plus, those are two very different career options. It's really not that much comparable. So what I want to do today is just give a very short overview over the main differences. And please excuse everybody, this is not going to be high depth, but this is going to be rather general. And we're going to look at some general information about the business model itself, venture capital and private equity, entry options, the work content, so what do you actually do as a young guy at both fields, work-life balance, salary, and exit options. Now the business model. Okay, so the comparison of venture capital and private equity in general. So one big difference is in venture capital, you usually take minority stakes. In private equity, you usually take majority stakes. So you own the majority of the company, you're able to control the company. That is a big difference, and that of course influences in a major way how both industries work. And the second thing that must be mentioned is the holding period tends to be a little bit longer in venture capital and tends to be a little bit shorter in private equity, although there's major differences, right? So as I said, this is very general, but in general, on average, venture capital holds a bit longer than private equity. And what do they hold, right? So venture capital, minority shares, mostly in tech, young companies with high growth potential. Doesn't have to be tech, but young companies with high growth potential, whereas private equity, majority stakes in more established companies, usually much bigger companies, but also more established, growing not as quickly as the young companies that venture capitalists tend to invest in. And the last thing that you should take with yourself is the leverage that both fields apply. So venture capital firms usually don't use that much leverage. That means they take their money or the money of their shareholders, of their so-called limited partners, and they invest it into startups. Whereas private equity firms, they tend to apply high leverage, so they will also get money they will borrow additional money in order to be able to invest even more money. And even though they do that, the risk is usually much higher in venture capital. Why is that? Because you're investing in very young companies that have the potential to scale pretty quickly, but they don't have to. Like 9 out of 10 of those companies will fail, and there's just this one company that will make it really big and will become the next Facebook or Google. Now let's talk about the entry options. Those are pretty different for both fields. For venture capital, I made another video about that. Right out of school, what venture capital firms are looking for is people who have startup experience. So people who actually worked in a startup, or even better, started their own startup, and have even raised money. So they know how it feels. They have been on the other side of the table. They have been the ones receiving the money, and now they can switch sides of the table and they can become a VC and can give money. Or at least at the beginning, of course, as an analyst associate, you will not give money yourself. You will do more of the analyzing and vetting and selecting different companies. Whereas in the private equity field, usually there's a number of very traditional options to get into it, So first one, management consulting. I have so many friends from consulting who transferred into private equity after their career as consultants. That's very common. Secondly, also very common, if not even more common, investment bankers, right? Go to an investment bank 1, 2, 3 years and then switch to into private equity. Very, very common career move. So those are the differences. Of course, yes, you can also get into venture capital when you started, when you worked in investment banking or in management consulting. But usually, when we're talking about the ideal hiring profile, right? That's what I described earlier. Now, what about the work content? What do you actually do in both fields? Venture capital. And we're talking about junior roles, right? So we can talk about more senior roles in a different video, but if you join a VC firm, a VC fund as an analyst or as an associate, at the beginning it's really just crunching a lot of numbers. It's a lot of analyzing different startups, filling out Excel tables, but very quickly you get also more involved in day-to-day activities with the startups, for example. So if you are someone who's called a deal flow associate, what you pretty much will do is you will ensure the VC fund has deal flow. So you will go out to events, you will network with different startups, you will represent your firm, and you will get the word out there, you know, and so that means you have high interaction with different startups. Yes, you will also need to go back, you know, and fill in data about startups in your database. You will have to run models about the financials of startups, and we'll have to determine which startup is a good one and which is a bad one. But you see, it's rather diverse, although as an analyst I would say you tend to do lots of analysis and numbers crunching. On the other hand, private equity is a little bit less diverse, so it will not, of course, it will not happen that you talk to startups or founders, which might happen as an analyst in a VC firm, but it will also involve lots of building of different models, working lots with Excel, and that's why, by the way, private equity firm really like to hire investment bankers. They know these guys know their stuff in terms of Excel. They can trust them to be able to build an leveraged buyout model, for example, and that's why they are preferred candidates for a job in private equity. Pretty quickly, then you will also be, you will also be involved in different calls, for example, with investment bankers or consultants that are part of deals that you are doing, and at some point, yeah, you will also be part of different meetings with management of the firms and your portfolio companies. But I would say if I compare both, venture capital, you will have the opportunity to get hands-on a little bit quicker than in private equity. Work-life balance. That's a very difficult one, and I can just tell you from what I know from my friends working in private equity. But first, venture capital. At an analyst level, it's really, I would say it's, you work less than when you worked in investment banking or consulting. So that's for sure, but that's also depending on the firm, right? You might have firms where as an analyst there's lots and lots of work and you do your 80 hours per week, and there's firms that take it a little bit easier, we don't have to work that much. The good thing is, at the beginning, when you're more about the data, the analysis, you can really separate work and life pretty well. What happens pretty quickly though in VC is when you start having more contact, for example, with startups, with founders, you know, you have all of these guys in your contact list, they start writing you WhatsApp messages, they start giving you calls, and some of these people are pretty cool dudes, you know, so you actually become friends with these founders. And for me, that's the case. I have many founder friends, people that I have a professional relationship with, but they are also at the same time I have a personal relationship with. And that's when both worlds start mixing. And now you can either say that's bad, right, because you can't differentiate between work and life anymore, or you can say that's good. In the best case, your work and your life is just one. There's no difference anymore. But that's up to you to decide what you think about that. Private equity, it's a bit different, you know. As an analyst guy, you will have really less of that, and then as you kind of get to your associate role, it's also not like you mingle with thousands of managing directors of big firms and you have them in your personal WhatsApp list, right? So yeah, you can separate work and life pretty well. And in terms of work hours, all the consultants that I know from my personal network and all the investment bankers that I know from my personal networks, and these, if you remember, are the preferred hiring channels for private equity firms, they say it's, you know, much less work. So that's nice. Huh? That doesn't mean that it's like 30 or 40 hour work weeks, but let's say, you know, 60 to just have a number. Huh? Might be more, might be less, again, depending on the firm. Salary. Let's talk about salary. And we're just talking about the entry levels, not talking about the partner levels and the more senior levels. So as an entry guy at a VC fund, it's actually not that great. So you will earn less than, for example, your peers in investment banking. You will also probably earn less than your peers in management consulting. There's a bonus component in many cases, but in general you will earn less also than your peers in private equity. Why is that? Because venture capital is less comparable. You know, it's something where entry options are very rare. You have many small VC firms and they just hire one analyst every 4 or 5 years. So, you know, so it's also difficult to get these jobs and it's difficult to compare these positions. Whereas private equity is more of a, like, it's a little bit more common, it's a commodity, and you can really compare analyst salaries across big private equity firms. Now that's not the only reason, but in general I would say you earn a little bit less in venture capital than in private equity at the analyst and associate levels. Not mentioning any numbers, to be honest, because that's a totally different if you're in China versus if you're in Germany versus if you're in the US. So we can do a whole video on venture capital salaries, and I'll be able to give you all the numbers in a future video. And the last one, exit options. Exit options for both fields are pretty similar. Now, why is that? For both fields, you have the option to exit to portfolio companies. Huh? In both areas, you're working with companies that you're investing in, so you have a deep relationship with these companies, and you get to know these companies very well. So in both fields, there's the option to start a job at those portfolio companies. Additionally, in venture capital, what I can say from my personal experience is, because you meet so many founders on a daily basis, and if you're evaluating deal flow, you really look at thousands of companies per year, at least on a high level, and then you meet numerous founders. And you can imagine that this steady flow of network, of exchange with people, also leads to pretty attractive job opportunities, right? So you might meet a founder who says, you know, I'm looking for investment, but I'm also looking for a co-founder, you know. So if you don't want to keep your job as an associate at the VC firm, then hey man, why don't you join me? So that might also happen. Whereas in private equity, as I said, we're talking about bigger companies, we're talking about not meeting lots and lots of founders, but it's more about managing directors, people at a certain position that are not as easy to meet for you as a junior guy. So that option might be a little bit, this option might be not as valid in private equity as it is in venture capital. Yeah, so that's a very high level comparison, right? For each of these parameters that I mentioned, we can go into much more depth. And if you want, then let me know what your specific questions are, where you would like to look more into, what you would be interested in. And good to have you here, and see you in the next video. Bye bye.